Set,
A
set, set.
little thing. We are now live. Telegram.
All right, guys. I think we are live. Uh, hello and welcome, everyone. Welcome to our latest live stream. In today's webinar, we have quite a few members of our team. Uh, Me along with the two Siddharths that you guys know of. Today we are going to do a very interesting live stream where we'll talk to you guys about what's happening in the markets. We'll talk about the key events, right, that have affected our portfolios in the past month, that will affect our portfolio in the coming month, and we'll talk about, what our thoughts are there and where do we see the key macros moving, right? Then we'll take you through our key products, right? So we'll give you a PMS update, how the PMS is coming along, a lot of exciting stuff happening in that area, and then we'll talk about the small case side of things and how are the different small cases performing. We'll talk to you about a featured portfolio, which we will showcase how good the performance has been and the expectations that we have for that portfolio going forward. And then we'll wrap it up by talking about the October effect in the equity markets. So, without further ado, let's start. I will uh, share the presentation that we have created for you guys. All right. Yeah, so see, the first thing that we guys want to talk to you about is the broader trends in the market, right? So if you look at the recent trends in the market, you would see that, without a doubt, small caps have been outperforming, right, in a big way since the March of this year. And that is why in the different portfolios, our small cases or our PMSs, which are all tactical in nature, you would see that small caps have a big, allocation. And that is because of this return potential that they've been showing. You can see that the Nifty, on the other hand, has lagged these small and mid cap stocks, and gold recently has started picking up after the Israel war sort of flared up, right? So if you look at the weekly performance, you would see that gold has in fact picked up in the last week, even though in the previous few months it has been an underperformer. But recently, after the war broke out, you can see that gold has picked up. It's a safe haven asset which has picked up, and you can see that small caps are still outperforming the other mid and large cap categories. If you looked at it on a monthly basis, you would see on a monthly basis small caps are still leading among all the different categories that we're talking about, even though gold is now strongly picking up. We'll quickly go over the sectors also, what's been happening in the recent weeks, right? So in the recent weeks, the biggest cues have been the Q2 earnings that have come up. It has been the war, right? And you can see here that very interestingly, energy stocks have picked up, right? Which is because of the flare up in the crude prices. Uh, Banking and financial services continue to be extremely strong, whereas we've seen some correction happening in the real estate, which has been a big outperformer in the last 1 month. So this seems to be an organic correction. Numbers coming out of real estate have been very strong, but the sector seems to have corrected a little bit in the last week. IT, pharma, etc. have corrected. IT has not been very exciting performance in the Q2 earnings, and we have seen that effect on the prices as well, right? We look at the factors next, right? What are the factors that have been doing the best, right? So, everybody must be aware that the alpha factor has been a sort of an outperformer, right? That's why our alpha small case seems to be quite attractive to people. You would see that the alpha factor has outperformed the other factors in the last 1 odd years. Momentum has been extremely strong, and these high performing high risk factors have been one of the best performing factors in the current rally. If we go to the weekly performance, you would see that alpha is still going strong, even though the low volatility strategy has picked up over the slightly higher risk strategies, right? So you can see that the low volatility is predominating over the growth and momentum because of the volatility that has come up because of the war, right? So that is a quick overview on the sector and market stats. And now we'll go on and talk about what's happening with the different macroeconomic scenarios, different big themes into the market. So the first thing that we want to talk about is Q2 earnings. So guys, what do you think about the Q2 earnings?
So I think Nestle has come out with pretty good results. We're seeing Bajaj Auto has also come out with some solid results. I think banking sector is also releasing something recently, right? So it's showing good results, but it's a little mixed in my opinion, right?
Yeah, but it is mixed, but it's not, it's not bad, right? I think I wrote about it somewhere, right? That the results seem to be mixed. IT, nobody expected it to outperform, and I think it has been as per expectations, right? There hasn't been any big surprises that have come out on the either side. Banking sector, we've seen only HDFC come up with results, and HDFC, because of the merger, has seen a shrinking of the net interest margin in terms of FMCG, right? FMCG had a lot of interesting earnings coming out. You had HUL, which outperformed, the expectations, even though the growth was only single digits. You had ITC, which did really well. Nestle, like Siddharth said, did extremely well. And we're seeing a lot of excitement happening in that sector. And with the festive season coming up, Siddharth, we do expect the consumption pack to do well, right?
Correct. And I think when we look at again FMCG a little bit, when we last spoke about a lot of these sectors,
Mm-hmm.
we were talking about how there was uneven rain, there was some sort of monsoon impact, which could have had some impact in terms of production of various agricultural products, right? And that is probably something that the FMCG players would probably sort of highlight as well. But it's still very good results that they sort of posted this in the current quarter. But it'll be interesting to see how the sort of Kharif harvest comes up and how the current weather conditions that are going to come into in the winter months, how that sort of plays out in terms of crop production as well.
Definitely. Yeah, and in terms of expectations, so we do expect capital goods sector to post good earnings, right? Because of all the government funding that has come into the sector, we expect metals to come out strong because there has been growth in metal prices, and that sector is coming out from the bottom. Similarly, we do expect prices to also rise in that sector. Pharmaceutical might show decent results because of uh, big demand coming out of the US. You see US, you see autos, which might face some pressure. They've had an amazing last few quarters, but this quarter you could see some subdued performance because of the high commodity prices, right? So a
Do
lot
you
of
see this? Sorry, just talking about auto as well. Do you think the premiumization that's happening with a lot of people buying SUV vehicles and sort of higher end vehicles? Do you think that trend will continue in the current quarter that we're in, or do you think that'll sort of slow down as we go
Yeah,
into?
I think definitely that the trend has been there at the urban growth, and the demand for high value automobiles has been very strong. Where there has been a dip in the smaller segment, there has been dip in the tractor and autos that are dependent on the rural demand, and we might see that mixed bag of results coming out. So yeah, I think we might see that strong demand coming out of the SUV sector, especially with the festive season coming up and the wedding season coming up, right? So I think
Yeah.
that sector, that part of the sector might see that strong demand coming in, right? The second thing that we wanted to talk about is the war, right? That's the biggest thing that's happening in the market. It's extremely unfortunate what's happening in Israel and Palestine, and but yeah, see, it's a interconnected global world, and these things do impact what everything, right? So first thing that we are seeing is the crude prices, right? You're seeing crude has risen 10% since the war broke out. We've seen Indian markets correct. We've seen global markets correct. We've seen, bond yields sort of shoot up, right? And things like that have sort of happened. Uh, and right now, with the we're seeing an appreciation in the US dollar with the high sort of rates, and in this extremely critical situation, dollar has become a safe haven, right? And you're seeing the dollar prices go up, which will put a lot of pressure into the Indian economy, right? And our current deficits. What's very interesting is that we've seen a surge in fertilizer stocks, right? So if you guys track fertilizer stocks, you would see that these prices have shot up in India over since the war has broken out, right? And that's because Israel controls a very critical port for fertilizers, and because of that, there has been a pressure in terms of the fertilizer demand across the world, and we're seeing the price shoot up for fertilizers. Obviously, it's a very interconnected world. Everything, all the geography sort of impact everybody. This war is clearing up. Very different, large nations are getting involved, and this will continue to be the critical thing to watch, right?
Of course. Sonam, I have a question for you about, I mean, in regard to the war, right? So, if
Mm-hmm.
this is an elongated war, how do you see the impact on Indian markets, say in the 2 month, 3 month horizon?
In the 2 month, 3 month horizon, see, it totally depends on how the war sort of pans out. We wrote about, previously how the Israel and Palestine conflicts have sort of affected the Indian market, right? So these conflicts tend to have, shorter term impact on the global scenarios, but it will totally depend how involved the US and Iran and all these bigger geographies become in this conflict, how controlled this is. We're seeing some negotiations going on right now. So if the war solves, or if there is some sort of negotiation, then we might see, that pressure go out from the markets. But right now, we are seeing a lot of pressure coming out of the crude prices, and gold is coming up, which is safe haven, like you said, right? Because of uh, people sort of running towards safety.
Right.
Yeah.
Interestingly, just speaking about the war a little bit, I think Venezuela was recently the sanctions on Venezuela from US were lifted, which did not even weaken the oil prices in any significant way, right?
Right.
So I think there is oil prices have kind of already taken in the shock of what is happening with the war. It could very well cross the $100 mark as well. So that's probably something that's something people are sort of watching out for,
Yeah,
which will obviously
that
have an impact on inflation as well.
yeah, that would have an impact on inflation, that would have an impact on India's current deficit and all that, right?
Correct.
Um, but it totally depends on how the geopolitical scenario solves itself out, right? If it's a
Yeah.
long-term conflict, then it will definitely have a larger impact, right?
Yeah.
Now let's talk about the next big thing, which is the recession fears and the commentary that the U.S. Fed gave. So I think Jerome Powell last week spoke about that they're seeing a cool down in inflation, but it's still away from the 2% target.
Mhm.
And even though he said that he's not going to hike any rates right now, he did say that rate hikes are not impossible, right? So he did talk about rate hikes being, he might be raising rates in the future, which would be a worry for a lot of different markets, right? We saw the bond yield spiked after Powell's remark, and then it corrected itself. We saw that even though they are talking a lot about worries in the global market, unemployment rates are still low, which means that the U.S. economy is still robust, the labor market is still robust. There is no fear of recession because of that. But Jerome Powell did say that they will try to reduce growth in the economy to reduce inflation, and that could have longer term impacts, right? And we have talked about in a previous stream, I think, about US bond yields, right? They are in a deep correction year. We are near the levels of 2008 crisis, and that is always a big worry. And now with the US sort of funding the two wars in Ukraine and Israel, their balance sheets are in a little bit trouble. They are seeing historic levels of debt again rising, and the government is also uh, is about to shut down, and this and that. So there are fears out there in the U.S. markets, which we have to be very careful about and watch for, right?
Correct. And then just sort of adding on top of that, when we are speaking about debt and how a lot of these wars and other expenses that the US government is sort of taking on are getting funded, it's a lot of it is through debt, right? And when we think about debt, I think there's a number I was reading from an article. which said that I think this year the net interest payments for the US government were around $711 billion, which is about 33% nearly increase from what happened in FY22, right?
Right.
Obviously, interest rates have gone up. That has obviously contributed to a lot of this. But do you think as the debt figure balloons and becomes bigger,
Mhm.
how will that sort of play out in terms of the US economy? Because at some point you need to sort of bring in the debt component, right? And because that'll have an impact on your fiscal deficit, et cetera, as well.
Right. So I think it's a very involved question. See, US can print up as much money as they want because a lot of the global economy is dependent on the US dollar, right? And the US debt is considered to be the safest. But we saw last quarter that their credit ratings were in fact cut, right?
Mhm.
Because of all the trouble that is happening in the US, and the debt is in fact a big concern among economists in the US. And I think as long as that debt is ballooning up, we won't see the rates being cut, and there would be a pressure of reducing growth in the US economy. You could see correction in the real estate prices, this and that, and that could have a bigger global impact if anything sort of flares up there, right? So that has to be watched out for. Like I said, that there are no very very dire fears of recession just yet. We are seeing unemployment numbers still near historic lows. The economy seems robust. Post COVID, the dynamics have sort of changed, and we have to. It is a situation that we have to closely watch, and I think the U.S. Fed and the different economists in the U.S. Fed are also watching the numbers and taking the decision as it goes, right?
Correct. Yep.
Yeah. The last thing on the market updates that we wanted to talk about is the FII flows, right? So if you look at the FII flows, the numbers are a little bit worrying. We've seen some outflow happening in the last 3 quarters. And why is that happening? Because risk-free rate in the US is still the highest. So why not just invest in the US dollar? And geopolitical uncertainties and potential recessionary fears are making those investors run away from risk assets like Indian equities. They see the flight of safety and this and that. But if you compare that with the data coming out of the domestic investors, you will see that the domestic investors have in fact bought almost as much as the FIIs have sold, right? And I think that is the pattern that we've been seeing in the trends that are happening in the stock market, right? So if you look at it right now, large cap seems to be correcting and the small caps are rising, right? And I think what that speaks about is that Indian domestic funds, money is coming into small cap and mid cap funds, right? And
Mhm.
Indian domestics are buying small and mid cap stocks, so those stocks are rallying. Whereas the foreign investors, they are holders of larger cap stocks and they are sort of offloading those stocks, right? So buying by Indians is pushing up the small and mid cap prices, whereas selling by the larger FIIs is making the larger caps correct, right? So it's a very interesting dynamic that is playing out. And I think the change in this trend would totally depend on, I think, how the global macroeconomic situation evolves, right? Perfect. So this was all about the different the key factors that we thought would impact the market going forward. In the next week as well, we would see a lot of earnings come up, and that would be the most interesting topic of the next week as well. And we do have to watch out for what's happening with the war. We do have to watch out for what's happening in China, how the commodity prices are moving, and how the FII flows are going to impact the market, right? Now let's move on to the interesting part, right? So we will next talk about the performance of the right PMS, right? So Siddharth Agarwal, will you take over from this part?
Sure, absolutely. A quick update on the right PMS, right? So the PMS one is a new vertical, and within a span of 2 months, which is we've hit about 35 crores in AUM, so which is pretty good. And every time we come up with one of these sessions, we try to bring a new update, right? And the latest update is that for digital clients, I mean for domestic clients, we have digital onboarding. So all the TDS paperwork process, the turnaround time to get onboarded with our PMS schemes has sort of reduced, and it has reduced drastically from few weeks to few days. So while digital onboarding is something that domestic clients can
Right.
offer.
Right. To give you context here,
Yeah,
it used to take 2 to 3 weeks to open an account
right,
with the right PMS, but now it will take as much time as it takes for you to open a broking account with a Zerodha or a Upstox, right, which is like hardly 1 or 2 days. So I think this is a big thing for us as well, right? Because it reduces our workload quite a lot. So very excited about this thing coming out.
and I think it's very beneficial for the clients as well, right? Because they don't need to go through the tedious work of signing all the papers, checking them, couriering it back to us, right? Everything can be done
Right.
seamlessly.
Yeah,
So
yeah. So
that's
it's just
yeah,
Aadhaar based OTPs that go out, and the thing is done in
correct,
in a few
absolutely.
minutes. In fact.
Correct. However, I would like to mention the digital onboarding is not there for NRI clients right now, right? So we are still following the paperwork route, but eventually we'll definitely charter a way for that as well, right? Apart from that, the most interesting thing about the PMS is the performance, right? So if you look at the live performance, it has been of 17% in 2 months, right? Versus the index or the benchmark that we track, which is the BSE 500 total return index of about 3%. And we'll talk about each scheme and their returns shortly as well. Also, we've launched two new schemes, Alpha and Debt, right? So all our investors can, invest in these schemes as well. And also, I would like to mention the most interesting part is that as an investor, if you invest, say, X amount of money, you can distribute it through across all the schemes, right? So that's a larger benefit that all the investors would get, right? And we are absolutely inspired, and we are looking to explore more new heights, right? With all your support as well. Um,
Right. Yeah. So quickly, let's go over the performance of our key funds, right?
Correct. So if we look at the Right Factor Fund, which is our flagship PMS scheme that we launched, we've hit about 20 crores in AUM for that. And if you look at the returns of the fund, it is around 16.75% or 78%, right? And this is, as you can see the date, it is from 18th August, right? Till October is what you can see the returns, right? Apart from that, the most or rather the better way to understand returns for any scheme is to compare it with the benchmark. And over the same period, the benchmark has given moreover, say 2.5% returns. So this clearly says that the factor fund has been outperforming the benchmark index.
Right. And I think the response that we get, a lot of our investors are adding up capital to these funds, right? After starting with the initial corpus, and I think the performance that we sort of showed in the back test is now speaking for itself, right? So very interesting in that sense.
Yes, absolutely.
Let's talk about the next one, which is the hedged version of this one. You see that this started later, right? This started almost like week or 10 days later, right?
Correct.
I mean, 10 days later than the
Correct.
first one. You can see the performance differential coming out because of that, and obviously Factor Fund had a better month last quarter, uh, and last month. But yeah, this fund itself is also doing extremely strong, and you're seeing 10 crores of corpus coming up here, like we saw in the slides, right? That momentum has lagged a little bit, and Factor Fund Hedge has a bigger focus on momentum, right? That's why you're seeing a little differential coming out. But I think as the momentum gets stronger, you would see that this fund also take up strongly.
Correct. The
Uh,
best part about the hedge fund is that investors have a capital protection. Um,
yeah.
with the hedging strategy, the capital can be protected very well, right?
Right, right. Yeah, so with that definitely is a added
Absolutely,
benefit. Right? Now let's
absolutely.
talk about the Alpha Fund, right? So the Alpha Fund has seems to have picked up this month, right? And we sort of launched this again, a little later than the Factor Fund, but you can see that this has built up around 10.5% in performance, and the recent month seems to be very strong for the Alpha Fund, right?
Right. Also, I would like to mention that alpha is a very concentrated strategy. So the
Mm-hmm.
returns that you're seeing, are might seem sweet, but the risk is also high, right? So any
Right.
investor who wishes to invest in this particular scheme needs to be aware about the risk as well.
Right, definitely, definitely. That's a very, very good point. Perfect. So
Absolutely.
we have covered the three key funds that we offer, and you can see that the performance is encouraging. I think the best part about the PMS is that we get to talk to all these investors and understand what they think, what they are thinking about it, and get that encouragement from the feedback loop. So we are very, very excited about that, and we would love to keep on hearing a little bit about from the investors. I see some of them have already joined the stream. I can see Gulshan who's here. I've seen Santosh who's here, right? And Raspreet is here. So yeah, I think that's the best part, right? So that
Yes, absolutely. I mean, interacting with all our investors, right? Is it's always been a pleasure, and we get to learn so much from them as well, from their experiences, right? Um, so it's awesome to have such sessions, and very soon we will have a specific session for the PMS part as well. So that might be a closed session, but it's going to be very interesting.
perfect. So now moving on from PMS to the bread and butter, which is the small cases, right, that we offer. And in terms of small cases, also last few months have been very exciting. We'll talk about our featured small case uh, in the next section, but let's quickly go over the recent performance of our small cases, right? So let's look at the performance of the balanced momentum as well as the balance as well as the momentum strategy. These are our slightly larger strategies, right, where you have a larger concentration of large and mid caps compared to small caps, right? You would see that the momentum strategy has picked up strongly this month, right? After the recent rebalance, the momentum seems to have picked up. The current performance in the last 3 months, 6 months, 1 year seems to be quite strong, right? In the last 3 to 6 months, I think balance and momentum seem to have done the strongest. And we've been doing a lot of content, a lot of interesting work on the small case side. Siddharth, do you want to speak a little bit about what's been going on this side?
Sure, no, absolutely. I think so. Like you rightly said, both the balance and the momentum portfolios have sort of done pretty well when we look at it on a 1 month, 3 month, 6 month, on a longer term horizon as well. There is this sort of um, concept that we'll sort of talk about a little later in the session today, which is about October effect and how we can sort of identify maybe pockets of opportunities through that, along with how which was an article that we published last week, which was talking about how alpha is sometimes a little obscure for people, but there are ways to identify how that can be sort of beneficial if you're able to capture it, and what are the sort of techniques to do that. So those are things that we've been working on, and those are a lot of those research that we sort of present to you on a weekly basis is something that we are implementing in a lot of our portfolios as well, right? Um,
Definitely.
so yeah, that's the broad sort of summary there. But yeah, we can sort of
Yeah.
look at the small caps in the next slide, right, where we are seeing the portfolios. I think the small caps in the new India portfolio have done really, really well. And maybe Sonam, you can sort of highlight how that's sort of going.
Definitely. Yeah. Look at the numbers for the last 3 months, last 6 months, right? Last 3 months, the small cap strategy has given a 34% CAGR. New India has given a 28% CAGR. 6 months, look at these numbers, 67%, not CAGR, but absolute return. 58% absolute return by the new India portfolio, right? So these are, I think, very, very strong numbers. And I think these portfolios are rightly capturing, right? The new India portfolio is rightly capturing the trend that is happening in the market, right? With the new India manufacturing, with the government sort of funding a lot of capex in these sectors, defense, railways, manufacturing, electronic, etc. And these portfolios seems to be capturing that momentum in a strong way. You can see the innovation portfolios has also done quite strong, which is very, very strange, right? The IT sector in comparison, right, which is the parent of innovation, I think, right, because the innovation has a lot of overlap with the digital India, right? Fintech, biotech, digital, everything is overlapped with the IT sector. And even though the IT sector might not have done that well, the innovation portfolio by Wright Research seems to have done strongly, and even this month, it seems to be doing quite strong, right? Now, talking about the favorite, right? The recent favorite that people have, which is the alpha strategy, right? The alpha strategy has picked up performance this month. Obviously, last month we did see sharper correction, and which is something that we keep on talking again and again about. That alpha is a high risk strategy. So when the corrections are there, they might be sharp, but as you can see, the pickup is also stronger, right? So if you look at this month, where the small cap index has a flattish performance, alpha in fact has a good positive performance. You compare the since inception, which is I think now how many months? I think 4 months, right? In the 4 months, you can see that Alpha Prime has given a 37% return, whereas the small cap index has only given a 21% return, and large cap index has given hardly 5% return, right? So very interesting portfolio, and if you are looking for a interesting strategy, right, that can add this high risk, high return flavor to your overall portfolio, then do allocate a certain portion of it to this strategy, right? I won't say that this strategy has to be the whole of your portfolio, because it is a high risk strategy, and until unless you are a very very high risk investor, this should be a portion of your portfolio. But I think this should be a very interesting strategy for everyone who's looking to add that flavor to their portfolios, right? um, yeah, I think that is an overview of our different small case strategies. As you can see, the performance continues to be strong. You guys can expect rebalance coming out for the alpha. Uh, Tomorrow, you can expect rebalances coming out for all the strategies at the end of this month. And I think some of you might already have heard about it. Diwali is coming up, a lot of festive offers, a lot of interesting things that Siddharth is planning, right? A lot of giveaways, a lot of interesting stuff happening for our small case audiences, right? Siddharth, do you want to talk a little bit about it, or should we move on to the next part?
We should move on to the next. I think we'll let it be a surprise for the audience, as and when it
Yeah,
comes through.
but
But
yeah,
there
a
will be a
lot of
lot of things that are happening in the coming few weeks.
yeah, and not just in our portfolio, but I think in the market also, and that is something that we'll talk about in the next that last section, right? That the market
Yeah,
rewards investors towards the end of the year.
yeah.
Perfect. So now we want to, in our live streams, we want to create this regular feature, and this is based on a feedback that Raspreet gave, was that we'll talk about one of our portfolios, and this week we are going to talk about the Right New India portfolio, right? So let's look at the Right New India portfolio. You can see the amazing performance that this particular small case has given over the last 6 months, right? You can see how wide the gap of our performance has been between Right New India and the multi-cap index, right? Uh, Right New India right now has a multi-cap philosophy. It has, we'll talk about it in the next few slides. It does have a very decent portion of large and mid caps along with small caps, and even with that allocation, it has built this big outperformance over the benchmark, right? And I think we do get a lot of feedback coming out from clients, right? We do not speak a lot about this portfolio, but our clients do speak to us a lot about this portfolio. The strength of this portfolio has been, we can see, been quite strong. The opportunity in this sector is extremely strong, and we have to have a focus on this strategy, right? So to give you a brief about the Right New India manufacturing theme, what this portfolio does is it bets on the new age manufacturing in India, right? So right from the auto components to electronic manufacturing industry to specialty chemicals, specialty metals, defense, pharma, railways, all the interesting manufacturing that is emerging in the Indian market is what this strategy bets on, right? And that is our universe selection criteria. But within that universe, we take a momentum based bet, and we do risk management to define our participation, right? So having selected those stocks, we position our weightages based on uh, these quantitative philosophies. And I think a lot of people sort of appreciate how this portfolio has been performing in the market. If we talk to you about the allocation in this portfolio, you would see that this portfolio does have 30% large caps, around 23% mid cap, so very well diversified. It does not have a very high small cap exposure, even though small caps are 45%, but it does have a significant portion of large and mid caps also. In terms of the allocation, if you look at it, you would see specialized finance gets big allocation here. You would see apparels and accessories get an allocation. Pharmaceuticals have an allocation. Batteries, obviously, auto parts, chemicals, IT. So very well diversified portfolio, picking up stocks from these sectors that seems to be gaining from the government of India capex, right? And that has
Just
been a
a,
big stock.
yeah, sorry to interrupt you there, Sonam, but just a quick question. Why do you think it's been doing so well in the last 6 months? And when we look at what's going to happen next year, right, with the elections, etc., do you think this will continue in the sort of
Right.
overall
Yeah.
trend we see?
Yeah. So I think, see, the sector by this portfolio has been doing strong has been because of the government of India capex that has come in very strongly in the manufacturing sector, right? We've seen these coming through quickly. We've seen, uh, a lot of things happening, a lot of capex coming out from the government in these sectors, and we've seen the price appreciation happen because of that, right? So we've seen the rally in defense, we've seen the rally in railways, we've seen the rally in auto components, and that is what has built that portfolio. But like you can see that it's not overly invested into the railway and defense sector, right? You can see that finance, specialized finance, even apparel, accessories, and pharmaceuticals do get allocation. And like I said, that within that universe also we have a quantitative selection, right? We are picking stocks sometimes based on their momentum numbers, sometimes based on their risk numbers, and I think the stock selection within that universe has also worked in favor of this portfolio. Uh,
Sure.
Yeah. So talking about so that was all about the New India portfolio. I would urge our investors to look a little bit away from momentum and alpha and also explore the New India portfolio. I think it is a little bit, it will add diversification to somebody who's holding a momentum or an alpha, right? These are not very highly correlated portfolios. So a New India would help you diversify your allocation as well, right? And give you that flavor of this. Obviously, like Siddharth, you mentioned that election is coming up and all that is a worry, but I don't think that a trend of growth in manufacturing is going to be
Slow down.
impacted even if there is a government change, right? Because I think this trend in growth has come up because of very very organic factors, manufacturing moving away from China to India, a lot of foreign companies coming up and manufacturing in India. We have heard of Apple coming, we have heard of Tesla coming, and I think the defense and the railway sector, the logistics sector, the growth will not be deprioritized in any scenario that might happen in the future, right?
Correct.
Perfect. So, having talked about the new India portfolio, let's move on to the final part of this presentation, which is the October effect. So, Siddharth, why don't you take over from here and talk about the October effect?
Sure. Yeah. So we do a lot of research and we look at what are the different types of trends that are happening in the market, and this was something that really struck us as being quite interesting. There's a lot of research that has been done on this topic. You can find a lot of economists and um, investors are looking at this quite keenly, and they've done research not just over, we'll be speaking about 20-year period right now, but they've done research over a 300-year window as well, right? So it goes back to a much wider context. So here we can see a graph where there was a research that was conducted across, I think, 14, 15 different countries. And what they've done is they've compared returns that have occurred from May to October, and they've compared it against November to April. And what we're seeing is, I think pretty much in all cases, May to October sort of underperforms, and November to April tends to outperform when you're sort of looking at this on a comparison basis. And obviously, we can see India there as well. It's not like it's just Western economies. We're seeing a very sort of diverse analysis was done here. If we move to the next slide, we can sort of jump into the Indian market specifically. This is a little outdated study, but we've got a few other studies that have been done, and you can read about it probably in the wider article and the video that we've published. But just to give you a flavor, what they did was they looked at the BSE 500 and the NSE 500, and they compared it from 1999 to 2007. And what they found was, on a month-on-month basis, October, November, and December, if we look at specifically, right, October was doing not as well. But November and December have done really well, and they're probably the two of the best performing months when we look at the last, over the entire 12-month period. There was another study was conducted for the last decade. So it looked at 2013 to about 2022. And in that, what they noticed was for October specifically, they saw 9 out of 10 times it was giving a positive result. And on average, it was giving about 3% in terms of the monthly returns. So broadly speaking, October, November, December tends to do pretty well for markets. And again, if we go to the next slide, what we can see very quickly is there was a very interesting study that was conducted for the UK stock market, where they compared the October effect with a buy and hold strategy. They called it the Halloween effect in the study. And what they did was they basically took a portfolio and would sort of buy and sell strategies following what we've sort of described above. And they found two interesting things. One was obviously if October to April does well, you should see higher results, higher returns, and they saw about 3x higher returns following the sort of October effect. But the more interesting thing that I personally think is that when you look at the volatility, and again, a lot more data is available in our articles, but when you look at the volatility, it's higher for this strategy. But when you look at it on a longer term horizon, that higher volatility is offset by the fact that it's positively skewed. So that means you have higher probability of getting larger returns as opposed to larger losses, right? It's still very, it's still a risky strategy, but it's still something that was very interesting. And if you're interested in it, happy to sort of explore the articles and the videos that we've published on it. Just to sort of understand why this is happening as well, we can sort of move forward to the next slide here. For the Indian market specifically, why this happens is obviously because we enter this festive season period. We have Navratris, Durga Puja, Diwali, Onam, etc. that typically happens around October, November, December. In addition to that, a lot of the large financial institutions typically tend to do rebalances around September. So that can also sort of have a carry-on effect, which can lead to sort of October effects happening. But that's the broad summary. Sonam, should we talk about the festive season as well, or do you want any questions on October effect from your side?
No, definitely. I think the festive season ties up into the October effect, especially for India, right? Uh, the festive season marks the end of monsoon and start of the harvest season, and I think those few things, the consumption sort of increase after the monsoon with the harvestation of crops. I think we see a surge in activity in the economy, right? And I think that is what leads to this growth happening in the Indian market in the last couple of months. Uh, Diwali is something that we are excited about. I think the festive season has been a little bit delayed, right? I think I was listening to presentation by Metro Brands where they did talk about the festive season starting a little bit late, but there is a lot of festive buying that is going to come up in the premium sector segment as Diwali nears, as Dussehra nears, and as the wedding season is about to start towards the end of November, December, right? So we do expect a lot of consumption demand, a lot of activity in the economy, and I think which could bring a cheer to the Indian markets as well. But again, while we talk about all these effects, which are patterns that have repeated, but what we always have to understand is this is not foolproof at all, right? So while this might have happened quite a few times, it will totally depend on the current economic scenario, right? So we are seeing a big war, I think a couple of wars that are sort of happening in the world right now, right? And supply chains are mixed up. There is a lot of volatility happening across the world. Rates are high, so you have to understand the whole economic scenario before thinking that this would happen in a foolproof way. So that would be our advice here, right?
Absolutely, absolutely. And again, this was a very interesting piece of research that was being done by the industry and a lot of economists. So we thought we should share it with the wider folks. But like Sonam said, it's nothing is foolproof. You have to do your due diligence, and a lot of these seasonal effects do tend to get obscured by geopolitical impacts. For instance, September, if you look at on the S&P 500, S&P 500 over a 50-year horizon, I think September tends to be one of the worst months, primarily because a lot of black swan events have happened during that sort of month, and that can sort of really skew how the data or the analysis is sort of looking out at. But yeah, speaking about festive season specifically, I think what we can also see is it is a little delayed. There are a few challenges that we can see. However, the e-commerce sales have risen by about 19% in the last 5-10 days of the Durga Puja that was happening, the Navratri sales. We're also seeing FMCG stocks being sort of talking about festive season, helping them pick
Right.
up in the rural demand sector, right? Because that has always been weak,
Yeah,
probably on
yeah.
account of poor monsoons and high
Right.
inflation.
And I think there is expectation of the rural demand to pick up, even though that expectation has been there for a very, very long time.
Correct.
But
Yeah,
I
yeah.
think with the election season coming up and, uh, with the festive season coming up, I think people do expect that to happen. I think the FMCG earnings did speak a little bit about it. And so that you mentioned e-commerce sales, I think something very interesting to watch out would be, I think now the earnings season have become very exciting thing for new age companies, right? So we saw Paytm post very good numbers, right? After the close of markets on Friday, they had a 32% growth in revenue and the losses have cut down. So I think we could expect a rally happening in that stock in the upcoming week. We could see. I think people expect Zomato to post very good numbers. I think the price pattern sort of hints at that. People expect delivery to do good. People expect Policy Bazaar to do good, right? So I think e-commerce segment and these new age will become extremely interesting things, right, in the upcoming early season as well, right? I think that has added a new flavor into the markets.
Yeah.
Correct, absolutely, absolutely. And I think we are, like we discussed very early on, I think there is this premiumization that's happening in addition to the rural demand, probably hopefully picking up in the next few months. Along with, I think tier two and tier three is also seeing some demand spikes
Right.
based on e-commerce numbers.
Yeah.
Also,
Perfect.
just to add to what Sonam and Siddharth was saying, right? So in India now the World Cup is happening. That's also
Absolutely,
like a
absolutely.
festivity that's happening, right? So all the new age companies that you were mentioning, Sonam, from the likes of the Zomato to the Paytms are definitely riding on this wave, right? Uh,
Definitely.
so they're expecting a lot, and all of these companies are really going out to sell their products. So we should factor in that as well, of course.
Right. Right. Perfect. So I think this was a good session. We covered quite a lot, right? And please do give us a feedback if you liked this format of the live stream or if you want us to cover other things in the future. With that, we will stop the presentation and move on to Q&A, right? So, Siddharth, do we have questions that we can take up?
Yes, absolutely. We can start with the first one, which was, I think, by. Let me just quickly go through it.
Um, Abhinav has posted a question, then
Yeah.
Santosh. So yeah. Um,
So go for it. Go for it, Siddharth. Go for it.
all right. Perfect. Sonam, Santosh is asking your views on the manufacturing sector for next couple of years. Do we see more growth in this sector considering the global situations?
No, definitely. I think that trend of growth of Indian manufacturing has, picked up, and it seems to be a very, very strong trend, right? Which, and even political concerns in this and that might be smaller in terms of the strength of that trend, right? I think India is becoming a manufacturing hub. You are seeing the growth of electronic manufacturing in India. You are seeing the growth of defense manufacturing in India. You are seeing the growth of railways and specialty chemicals, specialty metals very organically in the industry, and all these things are getting stronger and stronger. So I do expect next few years, right, next decade and all be the decade of Indian manufacturing, and the growth of these stocks being strong, right, in the next few years.
I think Santosh, you should also explore New India manufacturing, right? It is very much in sync with what Sonam is saying, right? And if anybody is bullish on the manufacturing sector, then why not? Yes.
Definitely.
So we have a question from Pranati. She is asking and seeking your view on India's healthcare sector, right?
Mhm.
And will it see high demand?
See, I think India healthcare has a very strong long-term growth path, right? We are becoming the manufacturers of medicine for the global markets. The price patterns of pharma stocks have been a little bit volatile. I think we are very, very dependent on the FDA regulations, which tend to be a little bit erratic that we have seen. But yeah, I think there has been a strong demand for Indian drugs coming from the global market, which has given a good, uh, price performance to the pharma stocks. But like I said, that these stocks are dependent on the FDA rules, which tend to be erratic. When we talk about the other segment, which is healthcare manufacturing, right? Manufacturing of healthcare equipment, hospitals, etc. Those segments are a little bit more uncorrelated and seems to be doing strong. So I think the whole healthcare space has a lot of interesting opportunities to watch out for.
Right.
Yeah.
Perfect. We then have a question from Finance Guru. He's asking, China has pumped in about $100 billion into the banking sector. How does this impact our markets?
See, the China underperformance and low growth has been a constant worry for the whole world, right? And there is no clear answer for it. I think China is sort of pushing a lot to bring back its economy, but uh, nothing seems to be working there right now. I think if the growth picks up in China, right, it would benefit the global economy for sure, right? We are in an interconnected world, and that definitely benefits everybody. We might, I mean, you could see money going into China if that growth picks up, but the probability of it is not very clear right now. We could see metal prices spike up because China is the biggest consumer of metals, right? So if that happens, then we could see that rally happening, which we are already seeing, right? Metals have started picking up. So I think we have to see how that develops, right? Even though the government seems to be doing a lot in China, the effectiveness hasn't come up yet. So I think we'll have to see how that evolves, right?
Right. Very true. I mean, it does affect us it does affect us, but as you said, the analysis may be varied, right? Um,
Right.
we have a question from Manish Kumar. He's asking, market में अभी position और बढ़ा सकते हैं या अभी wait करें?
So sorry, I think don't have a short-term view on the market. If you think that you have money that you want to put into the equity market, right? You want to invest into the market for the long term, then it's not a good idea. I think to time the market in any. So if you talk about our philosophy at Right Research, right? If you talk about how we think about when to invest money, we think that every market has a in every market scenario, you can have a good investing strategy that would do well, right? So I think even in a bad market, we focus a lot on asset allocation. We focus a lot on strategy diversification, and that seems to do well in bad markets. In good markets, we see that momentum type strategies tend to do pick up a big pace, right? So there is a good way to invest in every market. So instead of timing it, we tend to rely on our strategies to give us the best allocation in any given market, and we don't think that any given scenario in the market is a bad scenario to invest into if you have a long-term vision, right? We are investing for the next 3 to 5 years. That is your investment money. That's not your short-term money, right? That you need in the next couple of months. So why not, have a long-term horizon and invest, whenever you think you can start.
Right. Just a follow up to what you were saying, Sonam, a lot of investors have this sort of dilemma, right? Whether it is advisable to do bulk investments or should one, look at SIPs. What is your thought on this?
Right. So see, if you look at the research, right, SIP has a benefit that it would you get to sometimes get stocks at lower prices, right? If you're buying at in a correction, then you will get that stock at a low price, right? But buying lump sum never hurts. You could in fact do lump sum investing as well, right? Uh, so I think see there's no hard and fast rule for it. If you see volatility, right? If you see a fear of volatility in the market, it's better to do SIP. But if you look at us as investors, especially on the PMS, right, we tend to follow the strategy as it says. We know that if there is a call for cash, it comes to us from the strategy, right? So we're not afraid to allocate from the day one, right? So I think totally depends on your risk profile, but I think doing a lump sum or an SIP, both are excellent opportunities, and you should have an SIP as a part of your monthly cycle. You should allocate certain money that goes into the market monthly, but starting lump sum, I don't think it hurts, right?
Right. I think thank you for answering that. I mean, we are receiving some really nice comments from people like Gulshanji, one of our PMS investors. So really appreciate that, sir. Rameshji is saying that my fund is underperforming the benchmark. Please look into it. Sure, we'll definitely look into it, sir. You can reach out to us after this, and we'll look into it and see what's happening with that. There is a question from Rajiv Sonam. He wanted to know more about the balance factor in the small case or the balance small case as well.
Hmm. Right. So see, balanced small case is one of our lowest risk small cases, right? It's a very well diversified small case that includes a number of factors, right? So it does include momentum, but it also includes value. It also includes low volatility. It has asset allocation components. So sometimes when you see that the risk is high in the market, that portfolio does well because of its allocation to value and its allocation to low volatility. But even in good markets, right, our allocation tilts towards momentum. Momentum tends to have a predominant allocation in most of the times, but other factors also come in as the market changes, and that one does a very strong risk management. If you look at the asset allocation for it, you would see that it tends to have a larger allocation to large and mid caps compared to small caps, even though every portfolio right now has a flavor of small caps, right? Because why not? That segment is doing well, right? So I think it's a very good portfolio for you to have in the long term, right? This could be your strategy, your core strategy that sort of gives you that edge over the market in the long term. And I think I invest, I think, the highest amount into the balanced portfolio among all the small cases. So I think it's a good portfolio to have in your basket.
Right. Right. Perfect. So I think, as the name suggests, it's a very well balanced portfolio, right, in terms of risk profile as well. Uh, so, yes, perfect. So we have a lot of questions around the Alpha Prime small case, Sonam, right?
Mm-hmm.
Gani is asking that once many people start subscribing to Alpha Prime, price slippage might be issue for stocks with low volume. Uh, so,
Right.
what
So
do
yeah, no, I think that's also an interesting question. What I would say here is that Alpha only still only chooses from the top 500 universe, right? So I think the minimum market cap that we might be investing would be more than 5,000, right? Or I think 7,000 odd, right? So I think the size of the Alpha small case is nowhere near that number, right? I don't think that any of our products have that impact on the market right now. So I don't think liquidity is a concern, or uh, the size of the portfolio impacting the market is a concern just yet. I hope it becomes in the future. That's the dream, right? That we are going
you-
to impact the market. But we are a little bit far away from there right now. And yeah, I think these are small cap stocks that have picked up trend. So you might see one or the other stock hitting a circuit, or one or the other stock going into ASM GSM. And ASM GSM doesn't mean that it's extremely bad. What ASM GSM means is that these prices have moved fast, right? So that's why they've been flagged, right? Obviously there are other concerns around it, but what you also have to understand is that that is what why NSE flags these stocks. And yeah, but we are looking at it. You would see that if any such concern happens to any of these stocks, we do come and take action, right?
right.
Right.
Also, Sonam, do you think in the near future, do we plan to limit the number of subscribers for Alpha Prime, right? Say if X amount of AUM is crossed or X amount of subscribers are crossed.
Yeah. So that has to be there, right? And that is why you've seen some of the large small cap funds close their subscriptions and all, right? But those funds who close subscriptions were of the size of 35,000 crores and this and that. We're nowhere near that. But we hope we reach that level, right? That is, like I said, that is a dream. And if we reach such a situation where we have to limit the subscription, then we would definitely do that, right?
Right. Perfect. We have a question from Raj Sonam. He's asking, can we expect good earnings for quarter three, which will drive Nifty to new highs? What's your opinion?
So Q3, I think, yeah, I think it is going to be very interesting. I think, we are seeing uh, the consumption sector is supposed to pick up, right? Consumption with the festive demand coming up. So that could be very interesting for that segment. We see metals and energy do extremely well because of the price flare up in the commodities. You would see real estate that would do again, has been doing really well, expected to do really well this quarter as well, right? Uh,
Mhm.
so yeah, I think this quarter will be interesting. IT segment could if things solve in the global market, IT segment could also have a boost, but that is very tough to time or predict. But yeah, Q3 could be quite interesting. Banks have been doing very robust, even though there has been pressure on the net interest margins, which we'll see how that plays out in this quarter. But nobody expects their earnings to be or their top line to be impacted in a big way, right?
Right, right. I mean, perfect. Um, Mr. DK Jain is asking how many shares do we have in the New India portfolio?
So I think New India portfolio roughly has around 20 odd stocks.
Mhm. Perfect. Uh, right. So we have a question from Abhishek Maheshwari. He wants to understand, does your fund move into gold or gold ETF when you see any down moves in the market and moving to safety makes sense, or is gold not an hedge at all?
No, no, we do have gold, right? So if you look at our allocation in the last year, right? So this year, like we showed in our slides, right, gold has not been the best performer, right? But if you look at our portfolio last year, gold did have an allocation in the balanced portfolio, in the growth and conservative, right? So gold was like a staple in all of these portfolios. And we do allocate to gold when we see that opportunity, right? Right now, uh, the flare up in gold prices has only come up for a week, right? And it is totally dependent on this war situation happening in Israel. You don't know how that goes, uh, but yeah, we do have gold stocks, right? So I think Kalyan Jewelers, Titan, and things like that do get allocation even otherwise.
Right. Ganesh Prabhu is asking, hey, I'm an NRI. Let me know what is the best way to take exposure to right funds or the small case.
Definitely. So, sir, please do reach out to us. You can buy our PMS as an NRI. We have a solution for you. We do have like almost 10 15 odd clients on the PMS who are NRIs, and it's a very interesting way for you to diversify your exposure towards India. On the other hand, you can subscribe if you have a PIS account as an NRI through which you can invest into Indian equities. Then you can use that to invest into our small cases as well, right? I mean, if you have like a broking setup in India, then you can definitely get exposure into our small cases as well, right?
Super. Siddharth Suri, one of our existing PMS clients, is
Yeah.
asking, when will it be a good time to invest all in or either go all in the next 6 months? Question mark. Yeah.
See, Siddharth, I think that is tough for us to answer. We do see the opportunities continue to be strong, even though we are all well aware of whatever the risks are. So I will not give you an all-in call, Siddharth. I'm sorry, but I think we expect the situation to be good, and we'll allocate accordingly. And it's always extremely awesome to talk to Siddharth Suri, and we should set up a call soon. I think, right?
Yes, yes, definitely.
Yeah.
Um, in fact, I think we have a lot of questions, right? So, guys, just to keep everything in the interest of time, we'll just take a few more questions and sort of wrap this up. It's a Sunday, so we'll keep it light for you all as well. Um, Perfect. So, Sonam, people want to understand the difference between alpha and momentum.
Yes, alpha and momentum is very clear, right? Alpha is a concentrated portfolio. It only has 10 stocks, momentum has 20 stocks. Both are following the momentum philosophy. Alpha is much more, riskier in the sense that only 10 stocks, right? So we give an analogy in our definition of concentrated or alpha that we did on our YouTube video, right? That, if you have 10 stocks and one of that stocks goes up by 10%, then the impact on your overall portfolio is 1%, right? If you have 20 stocks and one stock goes 10%, overall impact is 0.5%, right? So the returns can be very steep if the stocks are going up in that concentrated portfolio. Similarly, risk can also be steep, right? So that's a primary difference, that concentration is giving you that differentiation. And on the other hand, if you look at momentum, it has a higher diversification component, so returns might be much more stabler in that sense. But I think that's the primary difference between these two strategies, right?
Right. Also, Sonam, is there a maximum amount for investing in right momentum or alpha? And is it a good time to double down on your investments after the rebalance?
I think investing around the rebalance date makes sense, right? Because if you invested a week before, then you would end up rebalancing that portfolio in a week, right? So I think investing after the rebalance makes sense. We do see some interesting opportunities coming out to the market that you will see come up into your portfolios after the rebalance. So might be a good idea to if you're looking to top it up, to do it after the rebalance. When we talk about the PMS, right? In the PMS, we try to do it right. So if we see somebody putting in money before the rebalance, then we don't invest that money because we get to because we control the transactions, right? So we do not invest into the stocks that are going to be rebalanced before the rebalance. So we take care of that. But on the small case side, you have to be take that call, and you should. I think if you're looking to add more or invest more, do it after the rebalance comes in, right?
Right. I think that's perfect. Um, okay. There's a question from Wish. He's asking, what's the sector allocation as in large cap, medium cap in the balance multi-factor? I mean, he's asking about the market cap allocation rather in balance multi-factor in terms of large, medium, and small.
Okay, so to give you an idea there, let me bring up that data for you. Um,
I think alternatively, Wish, we can sort of share this with you after the call as
yeah,
well.
no. So if you look at that allocation, I have it in front of me. You would see
Also,
that large cap is around 21%, mid cap is around 25%, and small cap is around 53%. Right. So see, right now we're seeing that small caps are getting weight, but if you talk to any of our older investors, you would see, or if you go and explore our old allocation that we can on the small cap platform, you would see that last year large caps had the year before that mid caps had the majority, right? So this tactically changes, and why have small caps become majority in today's market is because of the run up that small caps have seen, right?
right. I think perfect, right? So this was a very good session. Just one last question to sum it all up, Sonam. Um, what is your pick or suggestions if somebody wants to invest, say, in the next 6 months? Which small case would you suggest and why?
See, next 6 months, I think, like we talked about, new India manufacturing, seems to have picked up, right? The capex theme seems to be going strong, and I don't see it, you know, getting down. I think it's a very well diversified portfolio that would see a lot of opportunities, and it's not just me. I think a lot of our investors are excited about it, and they talk a lot about that portfolio. Talking about the other portfolio, I think Alpha could be extremely interesting if the market stays strong. Momentum, is an investor favorite. It is always one of the top bets. If you're looking at slightly more diversified, slightly lower risk, then balance is an excellent portfolio for you to allocate into. So I think I've named most of our portfolios. Small caps,
Right.
small caps in fact is the best performer, right? Even better than New India. So I think I named every portfolio and
Right.
pick one that sort of suits your risk profile.
Right. One last thing, Sonam. A lot of investors are asking, given it's the festive season, is there any, discount or subscription prices, off for investors?
So Siddharth will hate me for saying for revealing anything. Siddharth is planning a lot, in fact, for the festive season. So I think that's all that I would say. But
Right.
if you expect us to come back, if you expect those discounts and offers from us, please do active across various channels. Do look at our website. Be active in engaging with us, replying to our emails, reading up the content that we see that we show, talking, watching our videos, and you would see the offer and whatever we are doing, the giveaways and whatever we are planning come out to you across the different channels, right?
Correct. And just to add to that, if there are portfolios that you're interested in or you're looking at, you can add. You can go to on the website and you can add it on your watch list, and that's something you can see on your dashboard then as well. So if you can add, let's say if you're interested in Alpha Prime today, go and watch list it, and over time you can then, as we hit festive season, you can then get whatever is the discounts there.
Right. And so that is talking about the rightresearch.in website.
Correct.
Uh,
Yeah.
yeah.
Yes. So I think we've
Okay.
answered most of the questions, Sonam. Yes, we are good to go.
Amazing. So again, a very interesting session. always extremely insightful to talk to our investors and cover what we've been doing. Please do give us a comment on what you would want us to do next, and if you like the format of this live stream, and if we should continue doing the live stream in the same fashion. Thanks a lot again for attending on a Sunday, and I wish you guys a good rest of the day and a very very happy week ahead of it. And let's hope the festive season brings on a cheer back, and we see the global scenario also solve itself, right? Perfect.
Perfect.
So let's wrap it up. Any closing thoughts from you guys?
No, just look out for the festive season. We have a lot of things going on. Hopefully, see a lot of you there.
I think this has been a very interesting session, and any question that we might have missed or we wouldn't, I mean, we weren't able to take up, you guys can definitely reach out to us after this session, and we'll be happy to walk you through those questions. Right?
See you guys.
Thank
Thank
you.
you. Take care. Bye.